pasi. Na pasi oyo ya boye, kai na pana mawa na kokate. Pasusu oyo na ponaka, bawela bokonzi, pena bavwatilio. Bavoti tango ekomaka, kai na komi moto pona bango.
Greetings to you all. We have joined us on this, the 8th in the Policy Dialogue series. Today we are looking at a follow-up subject to the last one with the same panel. We thought it was appropriate to have some reflections on what has happened since the last policy dialogue on this subject. But less to reflect than to highlight what is to be done to resolve the crisis. No doubt, as some of the commentators, including the Tendai Biti of the opposition movement and also a parliamentarian, has indicated, this has been the most disastrous policy performance, or the lack of it, since the 7th of May, when Mnangagwa was brought on a Saturday evening to pronounce on new policy measures, which included outrageously the ban on lending on the part of banks, something that has never been done unless others have heard of similar precedents. And not surprisingly, we saw progressive reversals of that policy statement, and finally a total reversal of it a day or two ago. Now, in the field of policy and political economy in particular, policy confusion also reflects badly on any government, to a point where, as a former civil servant myself, we never experienced such disastrous policy reversals, policy pronouncements. It is unprecedented. It can only be explained in terms of the current crisis, political and economic crisis that we have in Zimbabwe. Which political and economic crisis, those in power have tended to deny, try to deflect responsibility, blame sanctions, and so on and so forth. But I think, from my point of view, from a policy studies point of view, it reflects two things. One, lack of competence, skill, and knowledge of the sector on the part of those concerned. And secondly, the extent of the crisis which defies solution, which tends or lends itself to tinkering with policy. And that kind of crisis is likely to continue. And therefore, the one objective of this discussion is to try and afford us as a public, but also those in power, policymakers generally, some advice, if I may say so, informed advice based on the expertise that each of the panelists has at her or his disposal. And we know, some of us, that the fundamental problem is the political crisis. And therefore, a political settlement, of course, would be the basis of the Zimbabwe state re-engaging the international community and making peace to the rest of the world in the realm of the economy. And more importantly, macroeconomic stability thereafter. We have, again, the former governor of the Reserve Bank of Zambia, Mnangagwa, who is no stranger on this platform. And also he's a member of the board of the Zimbabwe Reserve Bank. On this occasion, we want him really to explain to us just how Zambia in the early 90s resolved this problem. They had a similar problem. And indeed, the region as a whole, local currencies are very effective to a point where the US dollar is almost absent on the market. So we'll be hearing of that. But let me refer you to our moderator, Janet, to take us forward into our discussion. Thanks, Janet.
Thank you very much, Professor Mandaza, for that background to our previous SAPES Dialogue, Policy Dialogue platform that we had, where we were discussing critical issues in terms of our macroeconomic stability issues, the government measures, and what should be done. And we are privileged today to have our second part of that conversation. In the previous policy dialogue, I had my panel, which we have brought in again today, where we will have our main presenter from the previous policy dialogue meeting last week, Tinashe Murapata, who is the CEO and founder of Leon Africa. He will share with us his insights from what Professor Mandaza has indicated. The past 3 weeks, we have seen quite a lot in terms of the government response to the current crisis, in particular, the exchange rate that we have seen depreciating, the increasing energy and food prices, and the rising poverty that we spoke about last week. But we also saw the governor of the Reserve Bank of Zimbabwe on our court saying that companies are producing well and the economy is overheating. That is a quotation that I take from the RBZ governor. And consequent to this, most of the goods in the shops are now produced locally. And this is also what they said. And to be precise, the government estimates that locally produced goods enjoy a 75% share of shelf space in shops. As such, the macroeconomic instability, especially in the exchange rate and the price inflation experienced in recent weeks, is entirely attributable to rent-seeking behavior like speculation and the negative ripple effects of the Russia-Ukraine war on global energy and food prices. So I'm just quoting this before I hand over to our main presenter, then we'll have our whole panel coming in, of course, with the different experiences. But this is the characterization of the current crisis by the government, that everything is functioning well, they're doing all that they can. But what we are seeing then is the rent-seeking behavior, the speculation and the ripple effects, of course, of the Russia-Ukraine war, mostly the external issues that are affecting our economy. In the recent weeks as well, about 3 weeks, we have seen basic commodities are now beyond the reach of the majority. We spoke about the extreme poverty, the 50% and everything, but I want to speak in terms of real terms. For instance, a 2 liters bottle of cooking oil is now costing about $6. A 2 kg bag of sugar is now costing $3.50. So if you have $10, you can only buy 2 basic commodities in Zimbabwe. But I remember that during 2009 and before we reverted to this current currency setup that we have, which is dual, if you look at it, you would know that with $10, you buy your 2 liters of cooking oil, you buy your 2 kgs of sugar, you buy your 2 kgs of flour, and probably a packet of salt, about 5 items you would buy from a $10 bill. In response to this, and having characterized this, the government in response announced a raft of measures which it is convinced will restore confidence, preserve value, and restore macroeconomic stability. And these measures include, among others, restoration of lost value of bank deposits, clearance of the forex auction backlog, continuation of partial dollarization, which is the dual currency system that we now have. They introduced the willing buyer, willing seller as the exchange rate management mechanism. They introduced a 0% quarter-on-quarter reserve money growth. They introduced tax incentives for using the Zimbabwe dollar, like the introduction of the 4% tax on domestic forex transfers, the 2% forex cash withdrawal levy per transaction for amounts at least $1,000, the suspension of the third-party country payments on foreign payments by banks, the suspension of bank lending by banks, by microfinance houses. But this, we know that it has been uplifted. Review of capital gains for short-term investments on the Zimbabwe Stock Exchange. These are some of the measures that the government has introduced. But we know that they introduced these policies, they issued decrees supported by the RBZ, but we have seen as well a reversal of most of these policies. And this gives us quite a lot of unpredictability. When they introduced this, there was a lot of condemnation across the board, with many labeling these measures as self-defeating. Major concerns that were raised around this unprecedented suspension of bank lending, coexistence of 2 official exchange rates, and the piling of additional taxes on already over-taxed citizens. So these are the areas where there were major concerns. And also the source of funds to be used to clear the existing auction forex backlog was not publicly shared, raising concerns as well around government further assumptions of RBZ-related debts. So these are the measures, the condemnation, the responses, we had them. So today, we want to go beyond last week's dialogue, where we characterized, we defined our problems at the macro level, at the micro level. We touched and scrapped, I would say, on the surface in terms of what has to be done, and we left. And as soon as we left, the government intervened with all these measures. So in this policy dialogue meeting, which I believe is very timely, I would like our panel today to focus on what really has to be done, because there was such an outcry. We are saying all these measures the government is introducing are self-defeating, and they know it because they started issuing other policy pronouncements to backtrack on those initial policy pronouncements. So my panel, my esteemed panel tonight, will help us to say, what should we then do? And I think this is an opportunity now to go deeper in the issues that they had started to speak to in the previous policy dialogue meeting. And as I indicated, we'll start with our first panelist, Tinashe Murapata, who will share with us. I know Tinashe said a lot in terms of we need a decade of stability, we need a currency board to deal with the money supply, to deal with the debt issues. and I'm sure he'll pick up from there and give us in detail in terms of exactly what has to be done. Tinashe, I'll invite you now, and I'll give you about 10, 15 minutes for you to share with us your response and your reactions, of course, briefly, but go on to say what are the practical things that the government should be doing now in our discussion and policy dialogue this evening. I hope it will be pointed in that direction to say what is it, what are the nuggets, what are the issues that the government has to take, and as the citizens, what is it that we should be pushing for. Tinashe, I invite you and I give you the mic.
Okay. Thank you very much, Janet, and everybody on the panel. So I think the agenda has already been set. The idea is to find solutions to the problem. And just to encapsulate the problem, I would say that it's manifesting itself in the current currency crisis. So every time you know that an economy has a problem, it usually manifests itself. So what we are seeing is the manifestation of the crisis. And the crisis is multifaceted, but what we need to do is to address it from a very logical perspective. So, you know, it could be political, it's also production, it's savings, it's the bureaucracy, it's antiquated machinery. There's a whole lot of problems, debt issues. But the best way to go about it is for us to address it from a logical perspective. And because the manifestation is a crisis in the currency issue, what we need to do, I'll sort of, you know, color it as if it's as if these are doors. These are house that we're entering into, and each room has enough problems for us to deal with. But we sort of need to the first door that we're opening is the currency crisis. So that's the one that we need to first solve. But solving the currency crisis does not mean that we've solved the Zimbabwean problem. As Dr. Ibo has already highlighted, there's a political crisis as well. So we are saying that it's very possible, even with the current government, to solve the currency crisis and still remain with the political crisis and still remain with the debt crisis and everything else. And it's also very possible to solve the political crisis and then come back to the currency crisis. So in whatever iterations you can think of, everyone has to solve the currency crisis, because that's what everyone is seeing. That's what consumers are seeing, that's what business is seeing, and that's what we're here. You know, we're here because there is a currency crisis. So under door number one, solving the currency crisis, what do we need to do? And I would say that the first thing that we need to do is to put something in place that ensures that we have some sort of discipline in terms of our money supply. We need that discipline. And unfortunately, because we've gone through hyperinflation, and the numbers I'm hearing now is that we've got close to $3 billion that's in the informal sector. That's money that's under the mattresses, or money that is somewhat being traded, but in the informal sector. So we want to invite this money back into the formal sector. Why do we want to do so? Because it's the basis of savings. Now, if you look at remittances, you've got about $1.4 billion that's coming in remittances through the formal channels, but ends up in the informal sector. If any country, if you tell the governor of the central bank that you are likely to receive $1.4 billion in the formal channels, but that money is eventually finding itself under mattresses, then that governor would have failed if they don't get that money in the formal channels. Imagine how big our financial services would be if that money every year was finding itself and staying in the formal channels. So the first thing that we need to address, the first thing that we need to do is to sort of build a characteristic that ensures that money stays in our formal sector, that when US dollars come in, they remain in our formal sector, and then the banking sector can start lending and can start growing. everybody is worried about the money in the economy. And this has been going on for 42 years. So it calls for extraordinary measures. So, you know, a lot of countries have not gone through hyperinflation twice in a decade, you know, so it calls for extraordinary measures. So the extraordinary measure that I am proposing is a currency board. Now, when we say currency board, what do we mean? All we are trying to do is to have a monetary authority that ensures money remains safe in our monetary system. That's really at the core. So not to take you into a very technical discussion, but at the core of it is how do we ensure that money that is in the financial services sector is safe? And how do we ensure that our savings are safe? That when an investor brings in their money today, they can take it away tomorrow and it's still the same value. It has not lost any value. And how the currency board works, it's got two pillars. So the first pillar is what we call the monetary authority. And what the monetary authority is, it's purely the rules, the formula, the principles, and the protocols that govern money issuance in the country. That is purely it. Rules, principles, and protocols. And the other pillar is the anchor currency. So it will sort of say, we are defining these rules, how much money we can issue in an economy based on this anchor currency. And whatever happens with our anchor currency, if we're exporting more, then there's an increase in the supply of the domestic currency within the market. If we're not exporting, then there's a decrease in the money supply. So it's directly linked to an anchor currency. Now, the anchor currency that I'm proposing, and there are many suggestions, and we could do it in many ways, could be a basket of currencies. And the basket of currencies are the currencies that we're already trading with. Because the currency, the manifestation of the currency issue comes about because people are trying to take their money outside of Zimbabwe. They bring in money, but they can't take it out. So that's why it has to be anchored according to our trading partners. And who are our trading partners? 40% will be the rand. I think about 25 to 30% will be US dollars. And then you will have the yuan there, you'll have the euro there, all our trading partners. So we're saying all the issuance of domestic currency is anchored by our trading partners. So what that does is it takes away and kills off inflation immediately. And if we sustain that over a longer period of time, you find that you would have solved the currency problem. Now, those are the two pillars, but what's the foundation? The foundation that I am proposing, and many are proposing, by the way, the other basket of goods could be our commodities. So you could have gold and platinum, because most of our trading partners, what they want from us is actually gold and platinum. So they will be willing to anchor our currency based on the commodities that we actually produce. And that will actually stimulate production of those goods and services within country. But for it to work, because we must not behave as if we don't know what happened during the dollarization era. And here I am really giving a response to those who say dollarization failed. The issue about the failure of dollarization is that there was no protocol, there were no rules, there were no principles. We were forced into it. And we were forced into a dollarized environment. And what eventually happened is when the politicians saw an opportunity to expand the money supply, never mind that it was a dollar economy, they expanded the money supply because we had not defined the rules, the protocols, and the principles in which our monetary authority should actually function. So that's why I say that this time around, what we first need to do is to define the monetary authority in terms of rules, protocols, and principles, and then anchor it in some form of trade basket of our currencies and or the commodities that we do export. But it must be underwritten, and this is the new suggestion, so that politicians cannot have any leeway or any say in what our principles are. Once we've defined the principles, they cannot change. So what I'm calling for is that it be underwritten, or it has a guarantor. And this is nothing unusual. When Germany, after World War II, most of their gold was actually in Fort Knox in America, because they traded with America. So it was quite convenient for them to put their reserves, which were in gold, in Fort Knox, and then have credit facilities with American companies. We were now investing in Germany. And these companies were investing and trading in Germany because they could see the amount of gold that was actually held in Fort Knox. So it was easy for them to, sort of have the sort of confidence that, yes, indeed, whatever happens, if I get in 5 years' time, it's okay, because I can actually see their reserves growing and they're in a safe country. No one is going to get hold of that gold. So I sort of think that for the Zimbabwean scenario, what we need to underwrite our currency board would be the SADC Secretariat that sort of says, well, we will look and audit the monetary authority rules and principles and governance that you put in place. So they sort of are an audit in, I think it's in Peru or Chile. The currency board is actually audited by an audit firm. So the audit firm is the one that tells society that, well, this is the amount of reserves you have, this is the amount of trade you've had, and this is the amount of increase in money supply that you've had. So I think that it should be underwritten by the SADC Secretariat. It could very well be the ADB. It could very well be the South African Reserve Bank. It could very well be a combination of these people coming together and saying, yes, we will act as guarantors, because it's also in our best interest. It's very much in South Africa's best interest that Zimbabwe solves its hyperinflation and its currency problem. It's also in the SADC's mandate for it to be part of the solution to solve the currency problem in Zimbabwe. But also what it does is that it lays the foundation of what is happening around Africa, where you're seeing common currencies. We've seen that in East Africa. We've seen that happening in West Africa, and it's certainly going to happen in Southern Africa. So we're seeing where we're going to emerge and find ourselves using a common currency. So this is sort of a halfway house. So it's a currency board that looks at it, that I see as a halfway house to full monetary union that will inevitably happen, especially with the free trade area, and also looking at what's happening across Africa and East Africa. But what it does for Zimbabwe is immediately it ensures convertibility, 100% convertibility of the currency that's in Zimbabwe with a foreign currency, whether it's US dollars or rands. So you'll be able to get your rands or your US dollars or your yuan, whoever that you're trading with. You're now able to get that currency without any hassle. So I would say door number one, to solve our currency, to solve our problems, the first one that we need to do is a currency board. So I think that I hope that that's a very practical way of looking at it. It does not need a new political dispensation. It does not need anything fancy. It just needs a determined government of the day that says, okay, this is inevitable. We're going into a monetary union, whether we like it or not. And Zimbabwe is better off ensuring that its industry is ready for that. And this sort of provides that stability. And if we have it for longer term, then what it ensures is you got $3 billion that's under the mattresses, suddenly gets into the financial services sector. And once you have that in the financial services sector, the banks will start lending and growing the money supply in a transparent and audited and guaranteed manner that ensures that the policies live within their means. Because when you have the monetary authority, what you're doing is you're disbanding the central bank. The central bank will no longer be there. the central bank will no longer have this, the government will no longer have this 20% overdraft facility that they have with the central bank. When the government wants money, what it will do like anyone else already does in the market. They will come into the market and issue out a bond, and people will buy into that bond. And in fact, international investors will buy into that bond because they now know and are guaranteed that they can get their money back. So that's my suggestion. It opens up into door number 2, which is
actually, I'll just ask that you round off, and maybe we'll move on to the next. But I do hear your points, so you can just round off maybe in the next 3 or so minutes.
Okay. All right. So to round off, I'm saying the first thing that we need to solve is the currency issue, because this is how our problems are manifesting. So we need to solve that. And that's door number 1. Door number 2, once you solve the currency issue, you find that it's easier to do a debt restructuring, because anyone who's holding Zimbabwean debt, if they know that in 10 years' time, they can get their money back and at a certain interest rate, and they don't need to worry about hyperinflation, or if the country can actually produce to pay off that debt, you find that they will be very willing to get around the table and actually restructure the debt. So I will finish off here and say that the practical way in which Zimbabwe can get out of its quagmire that it's been in the last 42 years of high inflation is a currency board. It solves 2 issues. It solves the current problem, which is currency, but it also is a halfway house to us integrating with the rest of Africa in terms of free trade and a monetary union. That is inevitable. That's the way Africa is going. So that would be my submission.
Thank you. Thank you very much, Tinashe, for those insights. And I think one of the key issues you're raising is the unbanked monies or forex that we have in excess of 3 billion that is in the informal sector. And the reason for that unbanked resource is mainly the issue of lack of confidence and trust. And with what we have seen in terms of policy pronouncements by the government and the reversal of those policy pronouncements, subsequent reversal of those policy pronouncements would actually continue to hammer on that confidence and trust and destroy it even further. So I am not too sure in terms of how that is going to be built. I like the idea of the monetary or the currency board, the monetary authority, the anchor currency, probably so practical in terms of having the currency board. But maybe the question is also how feasible is it? How is our government, the current arrangement, engaged in terms of having or establishing this currency board? You suggest maybe that as a halfway towards joining some monetary union of some sort, and I do not, or we should not also just think that that is the panacea in terms of resolving our problems, because monetary unions also have got their own problems. There is, of course, the issue around leveraging or taking advantage of the Africa Continental Free Trade Area as we try to unionize, having one currency as a region in terms of Africa, but also there are also practical challenges to that. But I would say that, of course, it is indeed a practical resolution of the current crisis that we have. I would not want to go further in terms of probing this or explaining and summarizing it. I would want to now call upon Dr. Caleb Fundanga, who is the former governor of the Zambia Reserve Bank and the board member of the Reserve Bank of the RBZ. I would like, last week, Dr. Fundanga, you shared a lot in terms of the Zambian experience. Zambia went through what Zimbabwe is going through in very many ways, but currently Zambia is on a very positive trajectory and pedestal and moving forward. It has built confidence, it has built trust, people trust their currency or the value of their currency. But today or tonight, I'm looking forward to having you share with us the step by step in terms of the steps that you took as an authority to bring back the macroeconomic stability at the policy level in terms of garnering the policy consensus and public consensus at the political level, the political buy-in, the political will, and also what the role of central banks is in all this in terms of building the macroeconomic stability. I know, and I'm hearing Tinashe saying at some point we may have to disband the role of the central bank in all this, and how practical is that? I'm looking forward that you will take us tonight on that step by step in terms of exactly what we should be doing in terms of the building of the confidence and trust. You had begun to do that last week, that people, it's not just the love of having the US dollar, but it is the value that is in the US dollar that has caused people to say, let us dollarize. But the issue is on the value. So if we could also build that value from our local currency, we would not care which currency we are using. So I'll give you the mic now, Dr. Fundanga, for you to share with us step by step of the Zambian experience, not in terms of the problems, we characterized them, we know them, but in terms of the steps that you then took to get Zambia to where it is today. Thank you, and I invite you.
Thank you very much. I think at least you've made my work a little bit easier by emphasizing that I should just explain what we did in order to be where we are today. Now, I got to the Bank of Zambia in 2002. At the time, we already had an auction, a currency auction system in place, but we continued to get problems. There was a black market. People were not satisfied with the foreign exchange being allocated through the official auction. Now, we sat down. Let me just probably give a little bit of background. I was discussing this same issue on Tuesday on a radio program by Phoenix Radio called Let the People Talk. It was a 2-hour program, and there were two of us, Mr. Malupenga, who used to be the managing editor of the Post newspaper, which doesn't exist anymore, but was a very popular voice at that time. And he carried out a lot of interviews, including the interview he did with me in 2008. And he has put all these interviews in one book, which he calls Conversations. He had conversations with presidents, former presidents, and characters like us. Although I must say that the dominant interviews were of political nature. So when I challenged him that we have more problems than political issues here, since our system at least has been able to change leadership through the ballot box. So why don't we also do issues? So when we went to the television, the radio station, there were just two of us, so I was given more chance to talk about economic issues. And this whole issue of how our currency evolved to where we are today was a key component of our discussion. Now, as I explained, I think the interview which I did, I think Professor Mandaza has got a copy of the interview which I did. I think I sent him a soft copy a long time ago. And I've also shared it with a lot of colleagues in Zimbabwe, including colleagues in the central bank, just to explain in greater detail what we have done. I can, if Professor Mandaza can't find it, I can send it to him so that he can share it with the panelists, so that probably they can, I might not be able to explain very well in the short period that I have. But what then happened in 2002 was that the system we had did not command a lot of confidence amongst the people, because generally it was a two-tiered system. It was agreed that if you want to sell foreign exchange, if you've got dollars, whose value were under 100,000 US dollars, you sold them through the interbank market. You would go to your bank and tell your bank that you wanted to sell, and they would sell it to the willing buyers. Now, if you wanted to get rid of more than 100,000, you had to go to the Bank of Zambia auction floor, where it would be sold probably in a weekly auction. So this already creates a two-tiered system. Those who had the big amounts went to the Bank of Zambia public auction. Those who had small amounts, even if you had $1,500 or 20,000, 40,000, you went to your bank and sold it quietly. Okay. Now, because of this, generally we observed that there was greater focus on the exchange rate emerging from the Bank of Zambia auction, and people hardly knew anything about what was happening in the interbank market. But our own statistics showed that there were more dollars being sold in the interbank market than we had dollars being sold through the Bank of Zambia auction. So you have therefore a situation where the public focus was on the exchange rate emerging from the Bank of Zambia auction, an auction which probably was not dealing with the bulk of the foreign exchange being traded. So how do you resolve this problem? Obviously, the people used to think each time because there wasn't so much being sold through that window, some people used to even try to avoid selling their foreign exchange through the Bank of Zambia window by breaking down the amounts they brought to sell. If you had, say, for instance, 150,000 US dollars, you would qualify for the Bank of Zambia window. But you could break it down into maybe 75,000 US dollars, 75,000 US dollars, and sold in the interbank market. The general perception was that you probably got a better rate through the interbank market. So you tried to avoid the central bank auction. Now, obviously, this created a lot of problems. Most of the times, the central bank was being accused of fixing the rate or favoring certain participants in the market and so forth. So when we sat down as a central bank, we thought the best, obviously, the auction system or any system which relies on the market it's a good system. And I think even when we discussed last time, there was general agreement that a market-based system is good. But it has to be designed in such a way that it engenders that confidence which we are talking about. I think it has been mentioned by the moderator that the system currently lacks trust, confidence, and so forth. We also had that problem. So to bring about that confidence, we agreed that we should just have one market, and that market was the interbank market, where we would all feed from the same pot, so that there aren't suspicions that maybe if I go and get my food from the other pot, I might get a better deal than from the other one. So we therefore made a decision to unify the market so that we just have an interbank market. Now, under that arrangement, therefore, anybody who wanted foreign exchange, you would just go to your bank. If you are selling, you would go to your bank and you would sell. If you are buying, you would go to your bank and you would buy from there. But for this system to work, there has to be an information system where every participant knows exactly the deals going on in bank A compared to the deals going in bank B and so forth. So to establish that system, therefore, we agreed that we would have an information system. Reuters platform was the one which was chosen, and everybody who wanted to be registered as a dealer in foreign currency had to have that platform. And we acquired it and trained people so that each dealer in foreign currency in each bank, when somebody came, they would be able to indicate two-way pricing, the buying price as well as the selling price. And if a deal was struck and the amount struck, it would be recorded on the system, and everybody who was an authorized dealer who had this platform would see what transaction had taken place, the amount involved, and at what rate, whether it was a buying rate or selling rate. So it was a requirement to have two-way pricing, buying rate and selling rate. The central bank also introduced or established its own trading room with its own dealers with a mandate to participate in either in buying or selling every day. That mandate was of a limited nature, but it could be reviewed usually around lunch hour. They could meet the debit governor operations to see how the trading had gone in the morning and whether there was a lot of pressure requiring our dealers to sell, or if there was excess liquidity, they could even buy a little bit of the dollars so that we could also build our reserves using that platform. So I hope this is very clear. So we therefore abolished the weekly auctions of the Bank of Zambia, and everybody went into the interbank market. And it was very interesting that when this was done, obviously, now the focus on what is happening at Bank of Zambia disappeared. Everybody was just concentrating on where can they get their foreign exchange. And if a bank found that it didn't have enough, it could even buy from another bank in order to satisfy its own customers. So that kind of transaction, or those kinds of transactions, were very common amongst the banks themselves. And I can tell you that by 2005, we had started to see the impact of this unified market. The kwacha, which had perpetually been a loser to the US dollar, started to stabilize, and then also to even start appreciating. I've often tell a very interesting story, which I hope you allow me, moderator. And I know we don't have
yes,
a lot
please,
of
you can. You can. I think we have a lot of
this personal experience was I had bought a horse for my daughter who liked riding horses. And I didn't have one, I'm not a qualified horsekeeper, so I couldn't keep it anywhere at our residence. So I found some British lady who had something at the showgrounds, and we agreed on what to pay. I asked if I could pay in kwacha. She said, no, me, I'm an expatriate, so you pay me in dollars. So we agreed, and it was working well. Every month I used to pay her until November 2005. When I sent my driver to take her the money, she actually refused the dollars. And it took time, so I phoned him. What's happening? Why are you not back? He said, this lady here is refusing to take dollars. Why? She said, no, I don't want dollars. So I said, okay, but please accept, then we can discuss how we proceed. She indicated that she would prefer to be paid in kwacha, because the kwacha now had also strengthened, and the dollar was weaker now relative to the kwacha. But that act alone happened in a lot of other transactions with people. But that act changed people's understanding of how currencies work. And now they started to appreciate that even the kwacha could actually be stronger. But there were factors which helped us to reach that position. We were lucky to go through the HIPC debt relief, which reduced a lot of the pressure that were on our currency for debt service. And once our debt was cancelled, we started to earn more. Of course, there were other favorable factors like exports were picking up, partly to benefiting from the macroeconomic developments which had taken place as a result of reform in order that we could qualify for HIPC debt relief. So all these were factors, improved macroeconomic environment, made it more attractive to export. The foreign exchange in the market had improved and so forth. So the kwacha started to go to strengthen rather than weakening, as had traditionally been the case. And when that happened, we were out of the woods. I think everybody now started to have confidence in the kwacha. But of course, on the ground, everybody was free to establish, to open an account in dollars, in British pounds, in South African rand, or any currency, as long as your bank can handle the currency of your preference, you had. So we all had, even now, we all have different types of accounts in different currencies. There is no ban on this. But I can assure you that the way I use my dollar account is just the way I use my kwacha account. And sometimes you might even find that it's better to keep your money in your kwacha account, rather than putting it in your dollar account. But also we had reached a certain level of convertibility. I think the IMF calls it what? Is it fourth level or something, where you can actually move your money from your kwacha account to your dollar account just by giving your bank the instructions at the existing rate. They will move your kwacha into your dollar. If you feel that keeping your money in the dollar account is more advantageous to your own needs, or you can move it in the opposite direction, all those things are permitted. So this has demystified the dollar, so that the problem which we have in Zimbabwe right now, where immediately you get the local currency, you want to convert it into the dollar immediately. I think last time I was describing a situation where I was in the supermarket just outside Brook, and I was trying to pay using the US dollar. And somebody just rushed and said, please don't, give me the dollar, I'll use my Eco Cash. That kind of thing you don't find here. And nobody goes, because we don't have, although the dollars and so forth are operating, you cannot go to a shop and want to pay in US dollars, for instance, which is happening in Zimbabwe, or you pay in rands and so forth. All that creates further demand for the US dollar. Because why do you need the dollar? If you want to go and buy vegetables, cabbages, tomatoes, onions, or any other products that are produced in Zimbabwe, you need to use the local currency. So what is happening now is to create a very high artificial demand for the US dollar, and therefore it becomes much in short supply. Last time I had also mentioned that some of the things I've noticed in Zimbabwe don't happen in a lot of countries. For instance, like what you had during December last year, where public servants were getting their bonuses in US dollars. It doesn't happen. If I'm looking for a bonus here, it will just have to be in kwacha. And it's not even a debatable issue. So you have created a situation where the dollar is held at a certain level where it's not held in a lot of other countries. And if this can be ended by going to the interbank market, then this problem will disappear. I was talking about how people want to sell fuel, which they bought with money they got from the auction. They want to sell it in dollars again. It's these issues which don't help. Zimbabwe earns a lot of dollars compared to most of our countries. But these are countries that earn less than Zim, are not so much obsessed about the US dollar. Now, how can we end this obsession? In my view, the interbank market is the solution. I don't believe that we can dispense with the central bank. It's an important institution, and it's globally, because there are some countries that have tried these currency boards, but they used to be, the currency boards were very popular in older years. And I think that even between in the Federation of Rhodesia and Nyasaland, we used to have a currency board. It is from there that you had now the individual country central banks. But central banks perform a certain role. If there is no discipline, and I believe that last discussion we said, somebody pointed out that the very factors that are challenging Reserve Bank now will also come in even in the currency board. And it is true in certain countries this has happened. So there must be discipline. But what is the key factor in ensuring that there is stability? The M3, Tanasha was talking about broad money. The principal source of that problem is government borrowing. If government borrowing can be reined in, then the growth in money supply will be moderated. And that's what brings about stability and reduces inflation. I'm sure that if governments continue borrowing, either they are issuing bonds or whatever, there will always be pressures, particularly if the money raised from the bonds results in consumption rather than production, which is often the problem with public sector borrowing. So it is that which needs to be addressed. And in the case of Zambia, part of the reforms was to ensure that there was very, very good control at the Ministry of Finance itself, because that's where the problem starts from. If the Ministry of Finance can stop borrowing for the purpose of financing consumption, then the pressures in terms of the rapid growth in money supply, broad money in particular, then it's possible that you can actually have a stable macroeconomic environment. And with the stable macroeconomic environment, even the demand for foreign exchange will also be moderated. I hope I've done justice to your question, moderator, but
Yes,
I just thought that those were the principles we used. But whatever is happening at the foreign currency market must also have a relationship with what is happening in the public finances. And in fact, it's the public finances which are very important. If you borrow too much, you want to import cars and so forth and so on, obviously your foreign exchange will go towards the purchase of motor vehicles for the government and the other public institutions, and there won't be enough to buy the essentials that the people need. So it's not just a currency crisis, but it's a whole macroeconomic management which ensures that there is stability in a country. And we lost it after we left. I left the central bank in 2011. I'd been there for 9.5 years. And much of that time we were focusing on ensuring that we were doing things which were also compatible with what was happening at the Ministry of Finance. We worked together to ensure that whatever we were doing was not canceling the efforts of the other institution. This ended very quickly when there was a change in government, and we saw very quickly that when I was leaving, we had left 2.6 billion in reserves, which were accumulated during this period. Very quickly, the money was gone. We had also had the sovereign rating, which could also enable us to go and borrow, issue Euro bonds. In 3 forays into the market, we borrowed 3 billion. So the debt which had been cancelled quickly re-emerged because now people found, oh, it's easy to get these euros and dollars that we always want. Yeah. So you go on, and this is so that is that lack of discipline which is at the center of most of the problems that our countries are facing. So I thank you, moderator.
Thank you very much, Dr. Fundanga. I'm sure I'll come back to you at some point, but what I hear is the main issue when you talk about the auction, when you talk about information, when you talk about the role of the central bank in the stabilization process, there's the big question around the political discipline in terms of implementing policies, in terms of ensuring that we build the public confidence and the public trust. And there's a big question in terms of the nature and texture of the state. What kind of state do we have? Are we building on an economic model that is focused on development, that is focused on stabilizing, that is focused on transformation, or we just doing things anyhow, inflating, like you are saying, the M3 through government borrowing? I'm sure Chennai will briefly touch on this when I give you the mic as well, in terms of government borrowing. Currently, I think our debt to GDP ratio is in the regions of 90, already violating our own laws and in terms of the Public Debt Management Act, in terms of the RBZ Act. We are violating all our laws when it comes to borrowing. So we're also creating our own problems. Tinashe, in his main presentation last week, spoke to this, and he narrated and gave us the whole chronology from independence in terms of how it's been going south. And in our situation, he has said there's nothing unpredictable. You can literally predict it from independence in terms of our borrowing patterns and how we have actually been creating, you know, this inflating the money supply by constantly borrowing, by looking at external and domestic borrowing and the like since 1980. But I think you raised fundamental issues in terms of fiscal discipline, in terms of public finance management, in terms of fiscal management itself, and all of us coming together. But I think the other question, when we come back, I'm sure Tinashe will also give you an opportunity, because we're talking about disbanding and overhaul of the central bank. So I would also want to hear at some point from Dr. Fundanga in terms of currency board, central bank, where should we be in terms of strengthening all these institutions? Chenai, I'll invite you now. I know that at 7 you'll be leaving, so I'll give you the mic for you to share your thoughts and your perspectives in terms of the government measures that were announced, but then undone at some point. But previously, in the previous dialogue meeting, you spoke about the 4 pillars and said our issue is not just an issue of resolving the currency crisis. It's multi-dimensional. It has got many factors, and it has to be approached in that manner with a multi-factored approach. And the 4 pillars that we had outlined last week, we didn't go deeper into them, but I think this is an opportunity for you to say, okay, what are the practical things that can be done under each of those pillars, the 4 pillars that you outlined? I'm sure you outline them again this evening. Then you can say these are the practical solutions or the tactical solutions that the government should be focusing on. I think we've spoken about the disastrous measures that were pronounced by government, and the government actually concurs because they have reversed most of them. I'll give you the mic. Yes, Chena, you can go ahead.
Thanks, Janet. So just in the interest of time, I will try to go through quickly some of the tactical short-term and medium-term adjustments that can be done, that should be done to try and put the Zimbabwean economy on a path of recovery. However, I won't really, it would be a huge shortcoming on my part for me to say this without mentioning that what we actually really need is a complete overhaul of the whole system. I know that, we've all mentioned to death what has happened in the last few weeks in terms of the policy announcements and retractment of the announcements, etc. But I did mention last week that we have 4 key pillars that must be looked at in tandem in order to adjust. So inclusive of the currency crisis, and understanding the public debt, judicial reform, and plugging those expropriation gaps. After the most recent announcements, I would like to also add an additional exaggerated spanner in the works, which is trust. As we all know, the famous saying, trust lost in seconds takes a lifetime to regain. And the level of mistrust now leveled against both the monetary and fiscal arms of our economic policy cannot be regained overnight. So if in economic terms, if I was looking at our economic growth, I would definitely at this point be looking at adding a regressor of trust factor, which now has, I think, a dominant influence on the performance of our economy. So whatever we look at and whatever we make as adjustments, let us make consideration into how much they impact the trust element, because at the moment, this has really hit rock bottom. And without trust, there's no confidence in the economy, there's no confidence in the policymakers, and there's no investors. It's as simple as that. And we see these manifestations through the huge unbanked population that we've mentioned earlier. We see this through hyperinflation, people, investors and supermarkets, etc., even the informal traders, they will inflate their prices to take into account the risk element that comes from that element of trust or mistrust, as it were. So that said, looking at the short term, what I like to term the low-hanging fruit in previous discussions, that can have some immediate marginal benefits. And I think really, if the political will exists, we could literally do this tomorrow. All it needs is political will. Things like consultation with businesses. I mean, it's disconcerting when we get such huge announcements and everybody's shocked, everybody's very surprised. There is no engagement with businesses, and I include in this both formal and informal stakeholders. The policymakers must make a real intentional effort to engage the stakeholders. They should not be subjected to surprise announcements that result in further despondency and again worsen the country's risk profile. I think I discussed the element of risk in the last panel. This will also address some of the information asymmetries, which are a necessity to gain market efficiency. So we should try and get a place where the trading platforms, in terms of information exchange, everybody knows what is happening. You know, we should not be subjected to such surprises and not knowing what's going to happen next. So even we're at a situation now where an announcement was made, that same announcement was retracted, but people still don't understand or trust that it was really retracted, you know? So the market is still unsure about what is going to happen next. And I think if we start to engage businesses, get consultation dialogue going as soon as possible, I think this will go. I've seen South Africa use this a lot. And I think it's definitely possible. It doesn't take much. It's something that can be done as soon as tomorrow. In terms of addressing the currency crisis, again, this touches a lot on that confidence and trust element, especially in our banking sector. We need a clear pathway to dollarization, right? And I've said it, you know, we need a clear pathway to dollarization. And I appreciate Dr. Mnangagwa in terms of the Zambian situation and Zambia being able to use a local currency. But because of the expropriation and leakage within the Zimbabwe economy, there's just not enough value to back a local currency at this point. There's too much interactivity in terms of imports and other external interactions. That means that our demand for external currency at the moment is so high that it is not practicable for us to go down the local currency route at this point in time. So we need a clear pathway that says, by this date, the country will dollarize. And this is how we will transition to that state. Because at the moment, that again is contributing to high levels of unbanked population. People just don't know. We don't want to wake up tomorrow and it's 1:1. We are being told that we're going back to the local currency. What are we doing? We have a pegged interchange auction regime that has no finite period. So we really need that clear pathway to be announced and for it to be conformed to. The disbandment of the interchange auction, I think we will continue to say this until, I don't know what color, I know the common saying is until we're blue in the face. I don't know what color Black people turn, but we need to continue to call for the disbandment of the interchange auction and allow market discovery mechanisms through the banking system, such as been described by Dr. Mnangagwa as what happened in Zambia when they moved from a multi-tier to, I think, a dual and a single and then a single tier exchange system. This will allow banks to operate as banks. It will restore trust in the banking system and encourage further interaction between customers and the banks. And I think if we take one thing away from what Zambia has done and the benefits it achieved, at the moment, Zimbabwe, I think we're almost on a 3-tier. If we've got the power market, we've then got the interchange auction for the registered companies, etc. And then I think we've got something in the middle for the small to medium enterprises. I'm not sure how performant that is, but this is where we are. And within the parallel market system is then regional. You have different rates in Masvingo to what you get in Harare, to what you get in Beru, etc., etc. So these really are ways that the economy continues to leak and bleeds through, So we need to address this. And the one immediate way we can address this is through the interchange auction. When we last had this panel, Ambassador Mnangagwa mentioned the issue around the fungibility of the old mutual stock exchange, etc. But when I went away and investigated that further, central to that issue was the value pronounced by the interchange auction. And this was the point of departure where listed companies wanted to value using the interchange auction, and suddenly government was like, no, maybe we don't do that. But we have this interchange auction that seems to work for somebody. But we've analyzed it. A lot of analysts, including myself, have said for every dollar traded in the interchange auction, the public purse loses upwards of 50%. So we really need to disband in this. And I would say for me, these are our low-hanging, let's do this tomorrow. When we now look at our medium-term possibilities, what can we do in the medium term? The stuff that perhaps needs a bit more calculative thinking, we can't, for want of a better term, turn on the tap on this tomorrow. We will review the arbitrary tax incentives. You know, at the moment, we see the Ministry of Finance posing that they are stimulating investment through tax incentive. Recently, the Tax Justice Network actually articulates that 107 million US dollars are lost in Zimbabwe through the tax system. These tax incentives are not aligned to value addition to the economy. They should be reviewed and removed. A lot of these rebates have been announced in the last 3 years. If I had more time, perhaps at the end, I can go through some of them that I have identified from analysis, but they are arbitrary in nature. They do not, we are not sure entirely what value they're bringing to the economy. Businesses that are being invited to register on the Victoria Stock Exchange are being offered these tax incentives, and yet the same require infrastructure development, etc., etc. In the end, what we see from Fiscal is they will apply and get tax revenue from individual tax incomes, which is not fair. Individuals should not be subsidizing the corporate elites. We need to relook at our tax incentives and increase revenue by taxing correctly. We also have, sorry, just bear with me. We have the issue of public borrowing. You know, we have talked about this, and it's quite ironic really that in the last week, we've seen the Bloomberg reports on Trafigura, where we are being told that the government is owing up to 10 billion US dollars now to Trafigura for fuel, you know. And when you look at the budget statements, there's no clear provision for this. So this is clearly something that is a blind spot. We don't know what our public debt really looks like. Therefore, we lack what it requires in terms of preparedness. And now what we're having to do, and I mentioned this here because I think it's absolutely critical, is that to address, for example, the Trafigura debt, we are now offering them our exports through Kovimba. We don't know the extent of the export bill that is now being taken over by Trafigura, but we can only speculate the impact that that is going to have on our trading balance in terms of our trading deficit. And this will have an impact on treasury, it will have an impact on reserves. And then we start to see the sporadic announcements around lending, et cetera, et cetera. We need to have an independent public debt audit as soon as yesterday. It is through public debt servicing that, like I highlighted last week, contributing to the poverty trap, contributing to resource diversion. So it's so important that we are able to say that to a satisfactory manner, we have undertaken an independent public debt audit. We know what is owed, when it's owed, who is owed to, and then we can start to look at how we can tackle this. Mining, I talked last time about expropriation, and I will highlight how we can reduce expropriation from the element of mining. Mining is Zimbabwe's niche asset. You know, if you look within our region, I think we're probably one of the countries that has the most mineral deposit, varied mineral deposits in Southern Africa. It is our niche asset, and we need to increase the value in our economy by understanding properly who is investing, who are we getting into bed with when it comes to mining, how much of that is public investment, how much of it is private investment, and really relook at some of these deals that Ambassador Mnangagwa was saying in the last panel he has brought into the country and beyond. You know, a good example is Kovimba, which we have never really seen any sort of audit that says what are its assets, how much is owed and gained as revenue to the public purse. Is it really 65%? Who owns the other 35%, given the exclusivity of the mining rights that they have? So I would say in the medium term, these are some of the things that government really needs to do. Yes, it will take effort, but I believe by understanding and really getting into the bonnet of what is in our public debt, what is in our borrowing, what is valid debt, etc., and how do we reduce mining, in the way that we engage with foreign investors, in the way that we structure our mining deals, and allowing clear pathways for benefits for the local communities. I think I will stop there for now, just in the interest of time, Janet.
Sure, thank you. Thank you very much, Chennai, for that. And I think you are really putting forward and proffering solutions that are for the short term and the long term. I think the issue of dollarizing or not is one question that I would want to throw back to Dr. Fundanga, but also to Tinashe. I think it's something that you are speaking to. I'd thrown in the question around currency board versus the RBZ. I think Tinashe has been very clear about that. And I said maybe Dr. Fundanga can tell us more, because when he is explaining the journey for Zambia, the RBZ had to reform in many ways as a monetary authority and begin to exercise discipline and also enforce discipline. The Ministry of Finance, the monetary, the fiscal authorities, working together. But what I hear as well is that we are an economy that is in transition. But when you are an economy in transition, or when you are in transition, you have to have a pathway. We must be knowing in terms of the transitional plan that we have. How are we moving from here? Where are we going? There must be a destination, and there must be different markers in terms of where we are going. We will know that we are near Bulawayo, for example, when we are in Shangani. We have passed Gweru, we have passed Kwekwe, and the different experiences from each of those markers, the journey markers that we have. And that is what we also need to put in place for Zimbabwe. And there are many of the solutions that you're throwing in the pot: the currency board, the dollarization, a regulation authority, dealing with the exchange control, dealing with the taxation system, domestic resource mobilization, our mining sector, the issue of the debt, the public debt audit. These are all markers that we could say in where we are going with our economy in transition. These are the issues that we need to deal with, and this is what the government has to do. I am not sure that Ambassador Muchangwa is in the house now. If not yet, I want to just come back to you, your reactions, Tinashe, as the main presenter. Chennai has given us her perspectives, and Dr. Fundanga has shared with us the Zambian experience in terms of some of the steps that they had to take. I just want to hear your quick reactions before I call some of the participants in this policy dialogue to also maybe ask questions on my panel, or also share your own foresights in terms of what the government should be doing given the disastrous measures that they announced in the previous week or two. Thank you, Tinashe. I give you the mic for your five minute or so reaction to the perspectives from Zambia and from Chennai, our development economist.
Okay. Thank you very much, Janet. So I think my response to Caleb, Dr. Fundanga, I think he spoke very well and articulated the Zambian experience. And there's much to learn there. But I think we need to also contextualize the Zambian experience. So within 12, 15 years, they had 70% of debt forgiveness, and they went back into a debt trap, right? Within less than 2 decades. They're back again, and this time around with a much bigger debt. And that is a serious problem. And part of it, in my humble opinion, is that when they went back to the interbank market, they didn't have the right rules to say that what's going to happen with government expenditure. And government expenditure in terms of borrowings kept on borrowing, and there were no rules. So what's to say that Zambia again? I mean, they're going to get debt forgiveness, restructure their debt. What's to say that in the next 2 decades again, they won't be in a much bigger hole as Zambia? So what I'm trying to highlight is it's to highlight that the problem is actually with central banking in Africa. That central banking in Africa is somewhat an appendage of government over or public over expenditure. And that's the problem that we have. So Zambia benefits, for example, in actually being more disciplined than Zimbabwe, in that their over expenditure has not resulted in hyperinflation. So at some point, there's political change and they can sort of restart and get debt forgiveness and get balance of payment support. You saw that they got $1.4 billion from the IMF immediately after political change. But I don't think that they have solved the core issue. There's nothing, and here I'll be guided by Dr. Fundanga. There's nothing to convince me that Zambia in the next 2 decades won't be in a mess again. I think it was quite unfortunate that that Mnangagwa passed on. I think that he was on the right path, but we cannot allow our institutions or our economics be driven by individuals in power. So to me, I don't think that Zambia is, we can look at it, but I don't think that it has, I mean, if you look at other countries like Ghana, Nigeria, that also had debt forgiveness, they haven't gone back. They haven't gone back into a debt trap, a much bigger debt trap. So I think that it's quite important for us to locate the problem, that it's an African-wide problem, but a much bigger Zimbabwean problem. And then to Chennai, and here I'm saying I agree with everything that Dr. Fundanga made, and those were just my points of departure. So similarly with Chennai, I almost agree with everything that she said, and I'm only going to highlight my points of departure. And with Chennai, I sympathize with dollarization. I totally sympathize with it because money is just purely a store of wealth. But I think let's not divorce ourselves from the politics of Zimbabwe. That you can dollarize, but if you don't have written protocols and rules around your dollarization, there's nothing to stop that when you have a new government or a new party or the current party, that politicians would just wake up one morning and just expand the monetary base. Because the problem that we have, and that's why people in Zimbabwe keep hard notes and coins under their pillow, because you cannot expand that money. Now, the problem with the integrated financial system is that the dollarization we're talking about is digital dollarization. So when it's digital dollarization, it just takes one politician to just expand the digital dollars. So they're all in name because we haven't really stipulated the rules, the protocols, and the principles. So our dollarization, unfortunately, if it's formal, it's actually digital dollarization, and it's purely in name. And anyone can come and just expand. So yes, when we have a crisis, people tend to be disciplined, as we saw between 2009 and 2013. But immediately after that, or when you have an election, you can clearly see what happens. That's when politicians just expand that the amount of dollars or the stock of money within the economy. Just to give you perspective, when Professor Mtuli came in 2019, February 2019, the money supply, that's broad money supply, was $10 billion. And then within 3 years, it's now $500 billion. Now, it could very well, that 10 billion could very well have been US dollars, but there was nothing to stop the government from expanding it to $500 billion. It's just that it's now divorced from the dollar. So what I'm trying to, when I say currency board, it's really trying to say, let's have rules that govern our monetary system. Let's have rules that anyone can see, that are clearly auditable on a daily basis. Whatever system you're using, you can clearly see what is actually happening. I can tell you that right now, we don't know how much money is actually in the economy. The last report we got was in February. So that's when we had $500 billion. So between February and end of May, where we are now, we haven't received any report. So we actually don't know how much money is in the economy. And during that period, you had by-elections. During that period, you had shortages, food shortages. During that period, there's a lot that has happened. And we don't know how much money has been created during that period. And when we say the monetary authority, all we are looking for is first the transparency, so that we can all see what is actually happening. The second bit is the accountability, and accountability is it being underwritten by someone else. So once you have the protocols, you want it to be underwritten by an outsider. Now with the dollarization, then the underwriting has to be with the Fed, but we all know our relationship with the Fed. So I'm just being practical. So while my preference would be dollarization, but being practical, we know our relationship with the Fed. That's not going to happen. So the best person to underwrite our system would be our trading partners. And our largest trading partners are SADC countries, actually. And this actually then plays into what I term what's eventually going to happen. We know that we will have free trade. So currency, having your currency won't help in any way. It won't be a competitive advantage. So that's why I'm only calling for a currency board. A currency board is sort of the only way we can sort of solve some of the issues. It is certainly not a scale. I can certainly say that, but it's door number one. It solves our immediate problem. So I've just sort of used that to my points of departure with Dr. Fundanga.
Thank you. Yes, thank you. Thank you. And I think you concur on a number of levels with Dr. Fundanga as well in terms of the importance of information, of transparency, I think, which are really key issues. Tony, I do see your hand, but I just want to bring in Chennai is saying that she forgot to make a comment, a very short comment around the currency board vis-a-vis the RBZ. Chennai, it seems like she's dropped off the call once again. So let me take Dr. Fundanga. I don't know if you have quick reactions, then I'll come to your hand, Tony.
Yes, let me just comment on one thing. I think when Tanasha was saying something about interbank markets, that we didn't have rules about public borrowing, I think let's separate the two. The interbank market is for foreign currency trading within the country, and public sector borrowing is the matter I was saying lies with the government. And the two should not be confused in the manner that he was saying we didn't have rules about borrowing exist in every country. I'm sure that even in Zimbabwe, there are rules which stipulate that 1 year's level of borrowing should not exceed the previous year's budget by a certain percentage and so forth. The problem is lack of observance of these rules. And I must also add that even in the European Union, I'm sure most of you will follow what happens. They've got strict rules, but there was a year when Germany, which was supposed to be the most prudent within the group, and France were failing to keep within the public spending and borrowing limits that they have. And that raised a lot of worries because people were saying, if Germany can even breach this, what about the other countries? And then you saw what happened with the other countries when they had their problems. Relating to Ghana, I think probably, Tanasha, you have not been following Ghana's developments. Ghana is more or less in a similar situation. In fact, we always say that we tend to trail Ghana very much, what we do. It also has had these public sector borrowings, although in recent times it has benefited from the oil, which was discovered, but it also has this same problem of over borrowing, and it's something that needs to be addressed. But let me again emphasize this point that the fiscal management is at the center of most of our country's problems. Central banks in most countries are probably the best institutions in terms of the quality of human resource and the discipline that exists there is not equaled by most other institutions. If you see a lot of problems in a particular country, mostly it has to do with what is happening on the fiscal side and how politicians may interfere with what central bankers are trying to do. Within SADC, we have the SADC Model Act. We also have certain benchmarks that have to be observed. I spent many times trying to go over this and trying to see. In fact, when I went to the Bank of Zambia, what annoyed me most was that Zambia was an outlier. We were not performing well, together with Zimbabwe, of course. But I made sure with my team that we also tried to catch up with the others, and I think eventually we did. We became at least some of the good performers. So it's possible to do something right. I don't want to talk so much about the currency board. I know Tanasha is very passionate about it, but I think there are very few countries that have been very successful in running currency boards, but most countries do have central banks. Last time I did emphasize that once you are failing to run a particular system, the point to fix it. Don't run to establish another one, because the very factors that made you fail to run a system which is run properly by others will again come to affect the way you are going to run the new system. If central banks work very well elsewhere, why shouldn't they work in Africa? And this is the challenge that we have always faced. So try to fix it, because it's an institution which is globally working well. Even in those countries we look to, it works well. Even in China, it works well. In the US, it works well. So let's try and fix it rather than getting rid of it, because the replacement might even be a bigger disaster. I think last time somebody gave examples of somewhere in Latin America where they've had a currency board and the results have not been. I don't want to enter into this debate, but all I'm saying is that as a central banker, I believe that you can fix a central bank to do its proper role if there is the political will to do it. Thank you.
Thank you, Dr. Fondanga, for that. And I think there's a big issue around the independence of our central banks. And I know in Zimbabwe, when we talk about our RBZ, what we associate it with, for example, is the quasi-fiscal activities that actually perpetuate, you know, all these issues in terms of inflation, that perpetuate the lack of transparency, and, you know, the huge assumption of debts as well at the domestic level by the government at the end of the day. So I think the independence of our central banks is a key issue that we also need to deal with. I see that Chennai, who had made a request, has not yet come in, but we do have issues, and we also do not want to say Zambia is in the best of positions. I think its debt issue and question is a big issue, and with many lessons to learn and actually to take from it. And myself, coming from the debt justice movement, really hesitant to say that maybe the HIPIC really worked. Zambia found itself back, you know, in a very bad debt situation, and like you have said, its thresholds very high, almost getting into debt distress. Right now, a big issue, and that as well, twilight of getting into a huge debt, maybe 2 years from now, like Tinashe is saying, because the new government is trying to open up new credit lines. It wants development, it needs investment, and there's so many issues that may come with it. But the issue of transparency, discipline, and engagement and consultations, I think Chennai raised that issue, are key issues that we have to be focusing on. Engagement, how are we engaging at the local level to ensure that we have homegrown solutions to our challenges? How are we having consultations that build a consensus in terms of what exactly we need to be doing to build our macroeconomic stability? I think are key issues that we also need to be learning from other examples that have done it. How do they consult? How how do they engage? How do they ensure that every voice is on the table, be it from the business, from the civil society, from the citizens themselves, when it comes to building the stability that we are talking about? Because when we look at it, at the end of the day, everyone may end up contributing to the instability that we are saying, because we are all trying to preserve the little that we have. We're trying to stretch the little that we have so that it can do more. I have two hands. I will take you, Tony. Please do come in. Professor Mandaza, I know it's 17 past 7. We will be rounding up very shortly. So after Tony, I'll bring you in if I have to, or if you would want to me, when I hand over back the mic to you, you can come in. But Tony, please do come in now.
Thank you. And thank you for a very rich and complex economic analysis. There's a saying that if the only tool you have is a hammer, then everything looks like a nail. And it's a little bit like I feel this discussion is. Two points came to me through this discussion, and words that are used by economists continuously, and both of them use it, words like confidence and political will. One, I think, has a very explicit economic understanding, and the other speaks to politics. So for me, the two are linked. They're linked in this political economy way. And so the big question that was raised by this discussion was, what is to be done? And I think I've heard some very erudite technical answers to it, but they don't address the problem of the hammer and the nail. And where is the political will to solve these problems? And for me, this speaks to why government policies in Zimbabwe are government policies in Zimbabwe. And this speaks, in my view, to the heart of political power and the maintenance of political power, and short-termism in both political and economic decisions. And why is that? I would suggest that we're heading for a crunch. We're heading for a crunch in 2023 on a landmark election in which this government is facing very serious prospects of possibly losing this election, and is juggling with short-term, largely unhelpful policies for even the short term or even the medium term, because of the major political conflict that they face, which is the losing of political power. And therefore, they are unlikely to listen to any of these kinds of ideas about currency bullets, or reformed Reserve Bank, or changing the nature of internal investment, or dealing with debt. They're dealing with a short-term political crisis. Now, that's fine, and I understand the arguments that are being raised, which are for the benefit of the country. But in the very, very, very short term, I would suggest that a lot of the solutions they're offering depend utterly and completely on two things: on political will, and then fundamentally, as Tinashe and Chennai and I think Caleb pointed out, on the total lack of confidence in the state and the government in what they do with their money. They're not going to put money anywhere until the political power problem is resolved, and they have confidence in the state and in the government. Thank you. You're muted, Janet. You're muted.
Sorry, participants, and sorry, Tony. I thank you very much for your contribution, and I like it because Dr. Fundanga also said something when they left about over 2 point something billion in savings and in reserves, and a new government came in and you know, it started dwindling. They started taking from it as well. So I think they are, while we address the economic challenges and the economic issues, we also have political questions and governance questions that have to be tied in. And I like what Kapani has also put in the chat box, that there is the issue of political will, there is the issue of transparency and the governance, which are also key in building on all this. And we have said on this platform many, many times, and every time that I see policies being pronounced in Zimbabwe, they are driven by populism, you know, they are rhetoric, and they tend to create or to bear this fascism, you know, uncertainty, and sometimes the structural violence and sometimes real violence that we have seen in certain communities because of policy pronouncements. It could be because of then the displacements that may take place and the like, where people are displaced either internally or they actually go out of the country. So I think those are quite key issues. Professor Mandaza, let me bring you in with your contribution. I'm sure you may have some questions or clarifications that you need from the panel.
Yeah, I want to raise a very fundamental point in the debate, yes, and following from what Fundanga has said, which is that the problem with the Reserve Bank may be a symptom of a more fundamental issue. We have to go back a few decades, in particular, with the arrival of Mr. Gono at the Reserve Bank, and the extent to which the Reserve Bank became an instrument of the executive to this day. And therefore, to talk about political will, confidence, and so on and so forth, are platitudes against the backdrop of a government which has been using institutions such as the Reserve Bank for its own purposes. And the question of overspending by the center, by government, has in part been facilitated by the central bank. And to call for the independence of the central bank at the moment is maybe facile, as long as we have this government in place. And the lack of transparency, the point raised by Chennai about the Trafigura debt, not to mention the overall debt, which is, as you yourself in Zimcod know, has not been transparent. The government has not been transparent about this. We don't even know how much we owe as a country. And they've used, if I may add, the issue of sanctions as a cover. I dare say they're even afraid that sanctions might be removed, because sanctions, or the sanctions mantra, the sanctions narrative, gives them the cover to do what they're doing. This government borrowing for consumption purposes, all under the cover of darkness. This has to be tackled. Now, I think the opposition, Tendai Biti in particular, has been raising these issues. But it's not enough, with due respect. Why don't they raise a private member's bill to tackle this, to force government, to force us into a commission of inquiry on this problem? We can't just keep talking about it. We know what the problem has been for the last 2 decades. It's fundamental to this government. Can we force into an international commission of inquiry into this rot, which goes along with corruption, and the extent to which the revenues, and as Fundanga said, the revenues from minerals is enormous. Mnangagwa last year made the point that 9.7 billion came from the export of minerals resources. Where is it? Where is it going to? These are very fundamental questions. I thought I'd raise that so that the panelists could reflect and indicate how we can move forward to stop the rot. Thank you.
Thank you very much, Professor Mandaza. And we have 5 minutes to get to our 7:30. Let me give to the panelists to respond to these critical governance, political, economic questions that we have to grapple with, because I think the discussion is pointing to the fact that calling for transparency, for accountability of the central bank in the current setup, and I think it's something that I spoke to, understanding our statecraft is very key and important at this point in time in terms of who is calling the shots in all this, in terms of driving the debt, in terms of illicit financial flows, who is benefiting from all that is happening in the crisis that we're seeing, and who is pushing it maybe through arbitrage, illicit financial flows, the role of the cartels in the governance processes and the like. So let me, because we now have actually 4 minutes, Tinashe, if you can just come in response to both Tony and Professor Mandaza, then I'll call upon Dr. Fundanga, and we conclude. We just have a minute.
Yeah, I think those were critical interventions by Tony and Prof. Ibo there. It goes without saying that you need political will to implement anything, because we do have a problem. So it goes without saying. But I think I would like to look beyond the it goes without saying, is that when you do have that opportunity, when there is political will, we must never take it for granted, like we did between 2009 and 2013, where there was political will to sort of change things. We then took it for granted that that political will always remain. So that's all I would say, that is why we need institutions. We need to build the institutions, and that is why our recommendations are around institutionalizing good governance, because it goes without saying that you will definitely need political will to implement. But once that political will comes, and it might come once in a lifetime or once in a generation, what you need to do is we grab that moment and we have carte blanche changes in the system to ensure that future generations don't have to continuously go into this vicious circle. So that's all I would say, that it goes without saying we need political will, but when the political will happens, we want to ensure that we put in place a situation that will buttress the economy and will not be to any political whim, and can sustain itself. So that would be my conclusion.
You muted,
Janet.
Thank you very much, Tinashe, for that. And I think it really speaks to the institutional reforms that we need to actually implement, and also pointing to the institutional crisis, which is a big issue, and building on personalities. So if you go on the octopuses, you will see a personality, you will see an individual all around, and not institutions benefiting. So whatever resources, the 9 billion that Professor Mandaza is speaking to, could just be going to an individual, to a person, in different names, different companies, and there's no institution in terms of public institution that is looking into these issues. Dr. Fundanga, your final shot as you respond to the perspectives that are coming from the floor.
Thank you very much. I think what I can say at this moment is that consultations are very important. I think if we have wider consultative mechanisms in our countries, we can get a lot of inputs from the public. So I think we should emphasize on some consultative mechanisms being put in place. Transparency also is key. People need to know, when I was describing the system we put in place in Zambia, all this Reuters information platform, was to ensure that everybody knows what the others are doing, and therefore the emerging exchange rate is known by everybody and it should not be doubted by anybody. Dollarization seems to be a very big problem in Zimbabwe, but I must also say that in a number of countries, there is always some form of dollarization. Or if you come to Zambia, a number of people are charging their rentals in US dollars. And it's something we are always discussing, trying to urge people not to do it. Sometimes, even though prices are actually in kwacha, the reference is the dollar. And once there is a change in the exchange rate, the tenants immediately have to pay more in kwacha. These are problems, but they should not be problems which can bring to a halt the whole economic system. And I think they are occurring on a larger scale in Zimbabwe because of the multiple currency system. If you had one currency, I'm one who favors very much having a Zimbabwean currency. Although this love for the US dollar has always surprised a lot of us observers on Zimbabwe, that you chose a currency from a country with which you are not so much friendly to. So I don't know. If it was the euro, I would probably be able to understand this, but it's one of those issues that are quite intriguing. Political will ultimately is what determines whether you can move from the current situation or not. If there is a will, I'm sure that it can be done. If there is no political will, you keep going in circles. So I will end my discussion and to thank you for having moderated these sessions last and today. So it's been very interesting. Thank you very much.
Thank you very much, Dr. Fonanga. I think political will is very expensive in Zimbabwe, and I don't think we have really found the currency to buy it for, but maybe one day we will. Chenai, I just want to bring you in. We are closing, but you had an important issue to speak to when it comes to the currency board.
Well, I just wanted to say, I've heard it said before, I think it was Tendai Honorable BT who said, you cannot put lipstick on a baboon, I think. And I think Zimbabwe is yet to benefit from state-owned central institutions. So therefore, I would give a vote of extreme no confidence to any sort of currency board under the existing regime, because almost what we're doing, we're putting a band-aid on a gashing wound. You know, let's address, if we address the currency crisis and we move to a single currency, we dollarize, we have a clear pathway, we don't need a currency board. The market will self-regulate, the banks will do what banks do. If you need money, you go and buy it at the bank. Because at the moment, if we are trying to say, okay, we have a central bank, let's create another institution that kind of now monitors the monitor. You know, you're creating a prefect for the prefect. It will not work. It's going to cost us more because we probably have to pay for that board. It will introduce yet another layer of potential expropriation that will require auditing, et cetera, et cetera. So I think let's just grab the bull by the horns. Let's in the short term, let's look at a single currency status. That I think for me the most beneficial would be to dollarize. Let's look at immediate reforms in the way that we induce our debt and how we explain our debt statements. Let's be more transparent around that. So I think we just need to address consultation, currency reform, and stick to what we have for now. Let's try and introduce some trust as a currency that the policymakers can offer to the economy as well.
Thank you very much, Chenai. And I think you concur with Dr. Fundanga on that note. And I think one of the key issues, I think I see John asking this question, that the Commission of Inquiry, and I think he bought into this from Professor Mandaza. And I think it's about institutions, because Professor Mandaza said, why can't we have a private members bill that is sponsored in Parliament to call for a commission of inquiry into this rot that we are talking about, be it the debt question, the IFRS, the currency, you know, the way we are doing business, the expropriation of resources through various means and ways that it has been happening in Zimbabwe. So that's giving teeth to institutions, I think, in a way, and we have to be moving in that direction. And for me, that is one of my key takeaways, that what is Parliament doing? What is the central bank doing that it is not supposed to doing? And what is it that it's supposed to be doing and is not doing? And what do we do using the different institutions that we have, but also harnessing our own resistance as the citizens? How do we build our own movements that will resist some of these injustices? Because at the end of the day, it is us that are impacted through austerity, through the different taxes that we have seen. So I think there is a lot that we have discussed today. And let me give to Professor Mandaza to just conclude for us tonight. Otherwise, thank you to my panel. I think it has been excellent. There is a lot of perspectives that we have had. and there are a lot of takeaways from last week and this week that we'll have to take up in terms of institutions, in terms of discipline, in terms of our role as well as the citizens, and also, of course, characterizing, but saying, where are we going from here? And I think building that consensus through dialoguing is something that we have to normalize and keep on doing until we get to that point. I don't think that we have to weary in terms of dialoguing and trying to find the solutions. I think it is one of the key stepping stones. Professor Mandaza, may you just kindly conclude for us? Thank you.
Thank you. There's very little to conclude about. I think that we are difficult in answering the question what is to be done, if mainly because this requires a policy shift on the part of the central government, the executive. And at the same time, and we've made this point over the last 5-7 years, that we have in Zimbabwe a government which lacks both the capacity and the political will to change, to reform, to address these problems. And I'm not sure that my proposal for private members' bill will solve the problem. At least it will help to highlight the gross incapacity, the gross incompetence of the current government. And Tendai Biti calling for the government to resign, well, it won't happen. It won't happen. So in the meantime, it's ready to highlight the problem. The Commissioner of Equality might assist in highlighting the problem. But we as technicians, as policy analysts, we have to continue working at it in the manner that we're doing, playing our part in highlighting the problems. I think we learned a lot second time round from Dr. Fundanga on what Zambia did. And indeed, we need to continue looking at the neighborhood to see, to examine best practices. And even if there were a new government tomorrow, these are problems that are likely to confront it. We had a GNU in 2009, 2013. The problems were hardly. Dollarization during that period was not a government policy. It was an inadvertent development, And during that time, the government of the day, including Tendai Biti himself, Minister of Finance, did not establish the sound economic, macroeconomic framework through which we would emerge from these problems. So I think we need to look at this much more fundamentally. Now, and on that note, I want to just say that we in the next week, on next fortnight, on the second, we begin a program towards the 2023 elections, monitoring, auditing the process for a free and fair poll. But that is also because we expect that, as Tony Rila said, that the elections in 2023 will usher in a new dispensation, a truly new dispensation in the form of a return to constitutionalism, the rule of law, and the military back to the barracks. To cure, the election should cure the coup, so to speak. And we will be looking through the Policy Dialogue Forum at such subjects as the security sector and elections, the independence of ZEC, delimitation, first past the post, or PR, away from the idea of MPs being members of cabinet, to the Kenyan model, where MPs are not and should not be cabinet ministers in conformity with the genuine separation of powers. You cannot be a legislator at the same time you're in the executive. The diaspora vote, the voters' role in registration, the printing of the ballot, effective and meaningful observation of elections, counting and transmission of results, and dealing with electoral petitions. So we want to be sure that as we proceed, we begin preparing for a true transition to better governance within a government with capacity to reform politically and economically. I thank you on that note and look forward to you on the 2nd of June. But in conclusion is to thank Janet again for a job well done. Our panelists, Chennai, wonderful as usual. Tinashe, you've been working hard at this. And Caleb, my brother, thank you very much. Thank you and good night. Michael, have you bailed out? Michael? 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 I think we just end the session. Good night.
It was important for all the economist types.
Yeah. Where is this Michael guy?
I don't know. Okay. Quick summation. I mean, the content was very good. The attendance, but the content was good. Excellent.
It was too economic. It was too economic related.
Yeah, no, that's.
Yeah, it was weak.
I know.
It was weak in that respect. You know.
My beloved said the only two important points were made by you and I.
Yeah, we were political animals, you know, with a bunch of.
No, but